Hey everyone, and welcome to an operator's blog. In this episode, we will be learning from Skydo's journey to product market fit in India cross-border B2B payments. Joining me today is the company's co-founders, Movin Jain and Sriधर. For those who don't know, Skydo is India's premier cross-border B2B payments company. Skydo helps more than 6,000 exporters receive payments from more than 150 countries and 32 plus currencies. Prior to starting Skydo, Movin held leadership roles at Meesho, Ola, and PhonePe, and Srivatsan at McKinsey, Ola, and Rupeek. There's a lot to learn from their combined professional experience, and in particular, their journey of starting Skydo.
Thanks, Samitra. Great to be here.
Thanks, Samitra.
Great. So let's get right down to it. So I want to start with your backstories and sort of coming together to start Skydo, and any one of you can kind of take it. But walk us through the journey so far and how kind of the company started.
Sure. Maybe I can get started. So Srivatsan and I have known each other for I think 8 to 9 years now. We worked together at Ola. Overlapped there for about a year. He was my boss, in fact. And Ola was a melting pot of amazing talent. So I think we met some of the best people that we know in our network there. And of course, for me, one of them is my co-founder now. So we've been friends since then and kept in touch about our careers, our lives, our future plans, and so on. But the idea of starting up together never occurred to us till 2021 mid, when I think we were both, just catching up after, one of the waves of COVID, and when we had some time and, the world was opening up and so on. And we were exchanging notes about what do we want to do in the future. And that's when it occurred that both of us have very similar plans for the future. So it makes a lot of sense to come together and start a company. We gave it some time, about 5 to 6 months, to brood over the idea of starting up together firstly, which was the easier part. And I think we made up our mind pretty quickly on that. But the second on what to do together. We were sure we want to do fintech. We were sure we want to build a B2B business. And there were a few more such tenets that we were overlapping on. But within that, we went through a few ideas and eventually settled down on this one. Cross-border payments has been, of course, very, very broken and very huge market over the last many decades. And many companies have come and built huge businesses, and yet, most of it still remains unsolved. So it seemed like an ocean of opportunity, and at the same time, something challenging enough so that, you need a good team, you need a very disciplined way of building the business and so on. And that seemed to suit Srivatsan's and my style. So my journey across a few companies after I left Ola has been, I've mostly been leading product in different companies. And because Srivatsan is completely complementary, he's been leading business, sales, operations, and so on. We felt that we are a great pair of co-founders and could build a great business together. I think we see that every day now in terms of the kind of things we are able to do and the kind of things we are able to delegate to each other. I think having a complementary co-founder is really an amazing thing to have as a founder.
And Srivatsan, talk to us about why this particular idea. I mean, both of you together have such diverse experiences. I mean, everything from e-commerce to mobility to, of course, kind of domestic fintech. But this seems like a very, very different kind of a space. How did you guys kind of choose this?
Yeah, actually, mostly first principles thinking. We were clear to be in fintech. We were generally long on fintech, saying there's lots more demand than supply in all parts of fintech, be it lending or payments or wealth management, any part of fintech. I felt like India is long on demand, long on fintech. There is more demand than currently there is supply. But within that, we were, deliberating a lot on what kind of business we wanted to build. And we felt like a recurring business would be great, recurring revenue business. Um, I have always been biased towards software type of businesses for a long time. Ever since I came into Ola and have been, always tinkering with some idea or the other in my mind. Um, so initially, for example, it was around, office automation through HR tech and other things. Those kind of ideas were interesting to me. Then as I went along, I realized wealth management would be a great business to build in the coming years because India is just beginning to get wealthy, and so on. So in general, I've been like someone who thinks greatly of a business where you acquire a customer once, and just by being a very good product or a useful product for the customer, retain that customer and make a lot of money from that customer over their lifetime. So that is why I think kind of we kind of got into payments as a space. Movin was also already in payments at PhonePe, so he was able to testify to the fact that it's actually a difficult business to build. So therefore, once you kind of cross the initial hump, then you will be in a rarefied competitive space rather than everybody jumping in. It had regulatory moats. It had technology challenges, and it also had the ability for a small company to actually compete with the big boys. Unlike a few other spaces where it would be very difficult for a small company to get a toehold. Uh, so somehow all of this appealed to us. So payments was something that we naturally kind of got drawn to. And it's not like we, did not consider other ideas. We considered a lot of ideas. Like you rightly said, since both of us had a lot of B2C kind of background, consumer tech background, uh, a lot of our initial ideas kind of revolved around consumer tech. We were definitely enthused by the growing Indian middle class, the growing Indian affluence, and therefore, the propensity for them to spend on things online. So we continue to be very bullish on e-commerce, how it will grow and so on. So a lot of our initial ideas was around, can we be somehow a part of this growth, right? And I think that's been the theme really, payments and can we be a part of India's growth story. But within that, then we kind of slowly and steadily gravitated towards exports and imports, partly aided by my own experience as an exporter for many years in my family owned business, and partly because we felt like domestic payments is kind of already very well competed, not necessarily entirely served. There are still a lot of spaces there, I think, which can emerge, for example B2B domestic payments. But we felt like it is well competed. There are lots of smart companies building, and some have reached a very large scale, whereas international payments were still very very early on in the modernization journey. So I would say this was broadly the flow of our thinking.
Yeah, and my observation has been that that actually both of you were ahead of the curve. I think when you started at that time, I mean, yeah, the India there was Make in India, but a lot of it was narratives, right? And the
Yes.
geopolitics was still not clear. But I think in the last 24 months in particular, it seems like that bet is actually playing out really nicely for you.
Yeah, that's true. It's still early days, but I can see the momentum, and I can see India now being part of global conversations, which was not the case maybe even a decade back or even 5 years back.
Yep, yep, yep. I want to learn a lot about how you did the 0 to 1 for Skydo, right? Because that's when I spent a lot of time as a venture investor with founders in that stage, and it's typically, I mean, the most challenging stage, right? The classic cold start problem. Movin, I think starting with you, right? The whole concept of an MVP. And I think it becomes very, very interesting, especially in the context of a payments product, and that too a cross-border payments product, right? And I know, I mean, you've been a product leader as well in so many other really marquee Indian consumer tech companies. Uh, what has been your philosophy in terms of how do you build that first V1? What are some of the frameworks, philosophies, thinkings, approaches that founders should think about?
I'll try to start with a painful but very useful incident that happened a few years ago, from which I learned a lot about this. In my previous startup, which I started in 2015 along with another friend, um, in the social media space, for the first year and a half, we were working on our first idea, and about 6 months in when we launched our app across iOS, Android, web. It was a photo app. Some of my friends really praised the design and the UX, but after a couple of days, stopped using the app. And when I asked them, the reason was they already had a few other photo apps on their phone, and they just didn't feel the need to have one more. And they also couldn't understand why they should use, our app that was called Gallery 5. So I actually had a very harsh but very profound realization at that point. It might sound very obvious nowadays because there's enough, YouTube videos and literature about building an MVP and about product market fit and so on. Maybe it was there at that time also, and I was the one who didn't heed it. But I think I realized that before you build anything, before you write even a single line of code, or do any kind of work from a business development perspective, or any kind of serious execution work on a startup, you have to know who the customer is going to be, and you have to know what their problem is, and you have to know what broadly your solution might look like and why it will be better, right? So in Gallery 5's case, we hadn't done this thinking. We thought of a cool app and just went ahead and built it. Being techies, got enthused by the idea of building a cool photo app, and maybe this could be the next big thing after Instagram and Pinterest and whatnot. So with that thinking, we just built it. It's not impossible to build a great business that way, but I would say the odds are, 1,000 times less than the typical way of building a business, which is identify a customer, identify a problem, and then identify a solution. So because I had been through this debacle and learned a lot from it, and by the way, I wouldn't go back and change anything because I learned so much in those 1.5 years that it has been really helpful post that. But this time when I was building a company, because I was scarred from that last time, I knew that this time I just cannot make the same mistake. Going in, I have to know who the customer is, who the what the problem is, and what our solution will be. Of course, there are several risks in building a business, particularly before product market fit, and your hypothesis could turn out wrong. Despite all your thinking, customers may not be receptive to your product, and so on. But I thought I cannot go in without all of this. So Srivatsan and I, when we were brainstorming about cross-border payments, our thesis was the kind of business that Srivatsan used to run as his family business. That's the kind of business that will be our target customer. There are lots of small and medium businesses in India who are exporting and are bootstrapped, profitable. Some of them are second or third generation businesses. They're typically based in tier 2 or tier 3 cities, and making enough money for the country, and yet getting a really poor experience from banks, and also going through tons of compliance burden, post-payment taxation pain, and so on. So our thesis was, this is the target customer, and we will build something that is completely digital and transparent, convenient for them. And we will charge them for the services we provide. We will charge per transaction or some sort of a subscription fee. And so this is what we set out to build. Now, I think the third wave of COVID was going on when we were just getting out of our jobs and setting up the venture, incorporating the company, starting to look for the first few hires, starting to fundraise, and so on. So we could not really travel at that point to meet customers. We spoke to some of them on phone, but couldn't really get very deep. As the third wave started going away and we were able to travel, we went to places like Tirupur and Panipat and met some of these exporters that we were looking to serve. Each of them seemed to be pretty happy, or at least in a decent equilibrium with their bank in terms of the services and the convenience being provided. And it seemed like they're not jumping at the idea of something digital like this, coming their way and them being able to use it from their laptop. By the way, every one of them has a laptop. Every one of them uses email, Zoom calls, and so on to communicate with their clients. but it just didn't excite them that payments could be done digitally. They had a very deep relationship with the bank relationship manager and the branch next door, and a lot of physical paper exchange and so on was the way things were done, and it didn't seem like they were desperate to change this or they were really bothered by it. So that is when we, for the first time, realized that our thesis may not actually work out. And for the next few months, we started going back to the drawing board and started thinking about what else could we do then within cross-border payments. Luckily, we stuck to our overall space, and I think that was also the advantage of picking something that is so large in terms of opportunity size, that if you stumble a little bit, you can still come across something meaningful and large, maybe slightly adjacent, but within the same overall space. So in a few months, we learned about services exporters and the pains that they face, and the fact that they are actually much more ready to adopt a digital solution. So yeah, that's what we built. So this was I would say, the first few months of our journey in terms of building our MVP and finding product market fit. I think once we discovered this, it was pretty much smooth sailing till we then built our first product, started getting customer love, and so on. I think the other thing that we did well, which again, I think came from a lot of our past experiences, is we did not write a single line of code till we got our first few loyal customers. And the way we did that is, ultimately the job to be done is money movement. We need to get people their money from their customers in the US, UK, Europe, and so on. So why can't we do that over WhatsApp? Why can't we do that over email? That was the question we asked ourselves. And I remember doing KYC over phone calls and over video calls manually, and then onboarding those initial few customers who mostly happened to be our friends or well-wishers, and then getting them their payments without any lines of code. And we had a tech team, so we could have written code. We could have actually built an amazing interface at that point, but we chose not to. And we actually asked the tech team to join us in this kind of pre-PMF sales motion, where we were just serving everybody manually. So I think that was a really amazing decision that we took, and it helped us in understanding what exactly the customer wanted, and at various steps in the journey, from the time they onboard with us to the time they do their first transaction to the time they get their money, to their post-payment compliance, etc. What are their requirements? And then the day we sat down to write the first line of code, we pretty much had a really clear PRD. So I think that really helped. And of course, our first few customers are also to thank for this, because they stuck with us despite not having a great interface, etc. I would say we were much more manual than a bank is on that day, right? But they still stuck with us because the promise was that we will ultimately make it digital, and we did do that in a few months after.
I think the only thing I want to add is it's very tempting at every point to kind of spread yourselves sideways. Despite all the wisdom that is there out in the world, when you actually do some things, you forget learned wisdom of other people. So not saying that everything went perfectly, but I would say the first few months, I think we stayed remarkably focused and narrow. Saying that, okay, this is my customer, this is the specific type of payment that we can today serve. We can't do something even slightly adjacent. It's okay if we say sorry, we can't help you, than actually getting tempted and chasing multiple different even seemingly adjacent opportunities. That I think has been helpful. And you can always, what I'm realizing is you can always move sideways a little later once you have a little more capability. One of my past managers used to always use this phrase, focus before fragment, right? I never used to understand it back then. I always used to be very fragmented as an employee, because I wanted to do multiple things, be excited, get inspired all the time. And I think typically any smart kid coming out of college in their first few years or even up to a decade of work experience will probably want that. that, there is something new every few months to do. So I never used to understand what focus before fragment meant, but now the last couple of years, I actually feel like that's what we did. We focused a lot. And now, over the last 6 months, we have constantly been amazed at how many things, how many threads we can actually start pursuing. And I'm sure a couple of years down the line, we can probably do 10x of what we're doing.
And I think with respect to focus, it just reminds me, I was seeing a podcast by Seth Godin, and he mentioned something very interesting where he said the litmus test of focus is when you are repeatedly saying no to things that you really want to do with every bone in your body, but you still say no. I think riffing on this a little bit more, right? And I think Movin, you mentioned around doing KYC, email, WhatsApp, some new channels, right? I remember recording a podcast with Pranay Pratik, the founder of Signos. It's a dev tool company, and he mentioned something very interesting. His view was that the first version of the product for any company, right, it should always have the kernel of the unique insight, right, that the founders have. Then it's a true MVP. Otherwise, it's just a hack. And I was putting this in the context of Skydo in particular, right? I mean, so as an investor, I see a lot of kind of deep tech products where even the job to be done is unclear, right? And you are really in fuzz. I think in Skydo's case, the job to be done was very clear, but that also meant that there were a lot of alternatives. Customers had workflows, customer had kind of competing options, right? So how did you figure out the differentiation part, right? In the insight was clear, and there was a space and there was a tailwind at a market level, but figuring out that uniqueness, right, which you have to kind of prove at a very early stage even to get early adopters to sign up, right? So help us walk through that nuance.
Absolutely. I think the one uh, critical thing that our customers really appreciated about the way we did things, even from the very first transaction where we did not have any code, is the fact that we were transparent on FX rates. This was something that was a burning problem for anybody who was exporting. And they just had to trust their bank, have several to and fro arguments with the bank, but ultimately trust their bank and not be left with any other choice. And every few months, they would realize that the bank is actually doing something which they had not promised, or giving something less than promised. But because there was no other choice except just going to another bank or threatening your banker with, leaving them and going to another bank, etc., they just had to live with this unstable equilibrium. So the moment we brought in the fact that you exactly know what FX rate your dollars were converted at, what was the timestamp at which this conversion happened, so that you can actually tally the FX rate with Reuters.com or xe.com or Google. And there's no, soup of terminology that we are going to throw at you, like mid-market rate, interbank rate, and so on. There's just one rate that you see on Google, and that's the rate that gets applied to your payments. And because Skydo is a business, we need to make money. We will charge you something, but you will know upfront what we are going to charge you. And there's going to be no underhanded stuff of, baking something into the FX rate and so on. I think that was the one key thing which our initial 5 to 10 customers really got blown away by, and said that, you guys really need to now make a great product out of this. We really love what you've done with these first few transactions, and I want you to succeed.
This is so beautiful. I'm glad that you shared this, and I want more kind of founders to really listen to this, right? Because especially, I think India cross-border founders, there's always a tendency to look for so-called moats and differentiations in product and engineering, and trying to build one more feature and trying to over-feature products out. Whereas this almost seems like it's such a simple, almost like a business or a business model insight, right? And which is kind of the starting point.
Yeah, absolutely. I think even now, if you look at our ads on Meta and Google, etc., I think this is one of those key insights around which all of our marketing communication is centered. While a lot of competitors have actually tried and done the same thing, or at least pretended to do the same thing, I think whenever somebody thinks of transparent FX rates, they think of Skydo. So we've kind of ended up owning that territory. So it has definitely helped us that we had this one insight at that point. And of course, I think to anybody who's starting up today, it's not necessary that the one insight you have may work out. It's also possible that you are thinking that insight is really amazing and profound, but your customers may not think that way. So be ready to change, what that one insight is and learn from your customers. For example, one of the things we learned from our customers was flat pricing. We initially went with some complicated model of pricing where we said we'll charge you X% plus Y dollars and so on. The moment our first customer heard this, and for the first few transactions, we just didn't charge anything because we just felt we don't even know how to price this and what customers are willing to pay and so on. So the moment we started this conversation with our first few customers, by the way, some of them were also our angel investors, so they really wanted us to succeed. So they were really not negotiating because they just wanted a good deal. They actually wanted Skydo to succeed. They said, hey, it seems like after doing so much, you're actually going back to how banks try to make money. Why don't you actually do something much simpler? I thought you were going to, be significantly simple in terms of pricing compared to how banks do it. And that's when we then internally started debating. Initially, our mind was rejecting that idea. But then we actually came up with something radical and said, we will have flat pricing. And we'll, for every transaction, we'll just charge a limited, a constant amount. So that was $29 for all transactions up to $10,000. We just charge $29 flat. Over time, our pricing has evolved, and we've also started processing transactions larger than $10,000. But I think that core insight which we got from our customers around pricing also remains, in place. And for every pricing decision we take, I think we almost imagine that customer is sitting with us in the room and telling us, hey guys, what the hell are you doing? You need to keep this simple.
Yeah, I was just going to add one small point here, which is that I think all of us, anybody who starts a company is brave enough and smart enough actually to, probably discover good, unique insights. But only some of us, and at some of the times, are actually humble enough to, just use the insights that actually come your way. I don't think we really, to be honest, I genuinely feel like none of the world's problems are, need solutions that are not available. There are solutions all around us. We just have to be humble enough to take the solution when it comes before us. In this case, I would say, I mean, it's easy for us to say we were smart to come up with a radical pricing, etc. But the reality is what Movin said, which is, just the customer taught us what to do. We just, followed it. I feel like, by the way, that insight we need to keep reinventing that core insight every couple of years or every 18 months or so. Now I think Skydo 1.0 is well and truly established, and it will have a life of its own. It will keep scaling. And the 2.0 insight is just waiting to happen. Maybe that insight is already there somewhere, and we have to just look at it, or we have to just accept it. And then use that to build the next engine of growth, and so on and so on.
And I love the use of the word humility. I have kind of never heard it in the context of building MVPs, and but you're right. It is the probably the underlying emotion that best describes that is humility, because then you're willing to listen and have empathy for the customer.
I'll just maybe take a small detour. There was, the first school I went to, the person who set up that school, he was actually selling vegetables and spinach on his bicycle on the street. Okay. Then as he was doing this, someone told him that, hey, can you bring me, X or Y, right? Some products which are like more expensive than vegetables. Basically, I would say, some very rudimentary ancient version of Zepto. Right. So then he just started doing that. And then people could not pay for those things. It could be something as simple as a transistor radio, which was a big thing, 50 years back, etc. But he started doing that. And then, because he's anyway doing his beat of, selling veggies every day, he used to be able to collect small amounts of installments from them for that payment and, for that product, and, recover that. This actually helped him make enough money to then, eventually build a school. So, I mean, it's amazing, but I'm just saying that, great entrepreneurial stories are actually about listening to customers, and then working hard, uh, far more than going into a dark space and coming up with something blinding. So the blinding insight is out there. We just have to be able to get it.
Yeah, and survive long enough. Uh, that's also important. Going to the next topic, and Srivatsan, I think coming to you, right? The other part that a lot of 0 to 1 founders find challenging is kind of design partners, those early adopter customers. I know you both mentioned, right, like a lot of your early adopters were kind of friends and family. I think a lot of founders start like that. Beyond that, what was that experience of getting the buy-in from real customers, right? And specifically, and I was thinking in the context of Skydo, right? I mean, it's so challenging because this is not a SaaS product or a enterprise software product. You can pull it out, whatever, give it to a few devs. I mean, this is real money, and it's a trust business. You are literally competing. The alternative is actually a bank, right? So it's so hard. Must have been so hard to kind of get those early adopters, right? So talk to us about the learnings there, and how kind of other founders can use those learnings.
Yeah, it continues to be hard, by the way. And I think that's also like with each and every customer that we currently onboard. I actually do a mini, yes, kind of a thing, because, it makes it that much harder for anybody else in the same space, right? Because I'm now, going after these customers and able to win them over. But I think we started in a very simple way, saying, let's just, look at these first 10, 15 people, look at where people like them can be found. The obvious answer was LinkedIn and Twitter. We just started chasing them there. And we used to get a few of them to come on demo calls and then just pitch the product to them. It was just plain very, very back to the basics kind of a grind. Every day we used to do demo calls. And in that early team, so we were by the end of 2022, we were 14 people. Of that, there were only 3 people doing sales or top of funnel discovery. That was the two of us and one generalist we had. Everybody else was either a product person or a techie or a compliance person. Because we felt like, if we can't identify the customer and if we can't sell, then we can't sit in a room and ask other people to sell. So that was the idea. And every day our only question to each other would be, do we have one demo call for the day? Then soon it became, do we have one person onboarded for the day? Which means you'll have to do like 3 to 4 demo calls. So breaking it down like that, puts, gets the BP a little lower and more manageable. Because otherwise, if you start thinking, hey, I have taken so much money from investors, I have quit such an expensive, high paying job, and I am an IIT and my destiny is something XYZ. What am I doing here trying to get $20 or $30? That will actually completely screw up the whole thinking. Instead, actually, if we just start from the other end, which is saying, I am at zero. All I need is one demo. Similarly, I am at one customer every week. Can I move it to one customer every day, and so on? With some frequency of zooming out and checking that are we broadly on the right track. Of course, that is also important. You might be then otherwise doing incremental progress on a wrong direction. That is also not great. But as long as the progress incrementally is in the right direction, which you can periodically zoom out and figure out, small progress is all that you need. Just today being slightly faster, slightly better than yesterday. So initial set was just LinkedIn and Twitter. Then that one generalist became our SDR. He used to get the meetings, and we used to be the AE converting the meetings. Then, like Movin said, our engineering team and product team used to be the ops, compliance, and support guys. Doing the KYC in the background and just making the payments happen. So it was a very tight, small, almost like a cottage industry setup for those first few months. Slowly momentum started happening. We said this generalist was kind of struggling. He was getting to a point where now a lot of meetings are coming in, and then he's busy between doing Zoom calls, then following up with people we did calls with, and trying to do webinars, etc., to do meet people in a one-to-many format and so on. So now it felt like, okay, there is enough and more work for one person. So it means that we are at a place where we can hire one more salesperson, right, to do the demos. So we set just an artificial number saying the day we do 100 onboardings, 100 customers onboarded, that day we'll start looking for a salesperson. So then when we crossed 100, then we actually hired not one, but actually three salespeople, because we said if you hire a account executive, that person will be floating in the system. Very difficult to mentor that person. Even if it is way, way, way ahead of time, let's hire a sales head and give that person two account executives. Then it becomes like a small but very tightly contained team, and that team can, gradually grow. So this was easier said than done. Of course, it took a lot of effort to get the right set of three early people, but eventually we got there. By the time we did that, we were already at like 200 onboardings. And then we said, then the next problem came in, which is these two account executives are sitting there every day. They don't have enough leads to, work on every day. And the temptation was to turn the marketing tap. But we said, let's get to 500 customers. If we cannot get 500 customers organically, then maybe this is not a business. This is not a real business, and we should shut down and go home. If we can get 500, then we can start doing some experiments with ads. So we stayed patient and got to 500. In hindsight, there might be a criticism that, hey, maybe you guys were a little too deliberate and too slow in the first 6, 8, 10 months. And I think that's a legitimate way to think also. And, probably instead of Movin and me, if there were two other people building this business, they might have built it slightly differently. So I don't know whether this is right or wrong, but this was the approach that we felt comfortable with, going home every day and coming to work every day, saying, let's kind of be measured, be, thoughtful, and get to 500 and then, open the tap. And when we opened the tap, we did realize that, it was the water coming out of the hose was too much for us to drink, because, there was like, good leads, junk leads, a lot of chaos. And then that chaos, I would say it almost took us July, August of 2023 is when we started doing paid ads. It took us 4 months to kind of stabilize that channel and get it to a place where, we now knew what to do. And after that, it has taken us the last 1 year to kind of tinker with the right blend of, how many leads to get, what kind of conversion and what kind of wastage should you be willing to live with. Because the most optimal is basically a completely, leak proof bucket where you get one lead, that person is most relevant for your business, and then you convert that person. That is like zero wastage, but that's fundamentally unscalable. The other extreme is, you just, just open the floodgates, spend a lot of money, get a lot of leads, but then your conversion percentage will be really poor. And in reality, most businesses have to be somewhere in between. And I wouldn't even say that we know exactly what that balance is. We have been constantly trying to figure out that balance. We also knew that organic growth and growth through referrals, etc., are critical. And we kind of invested a lot from the beginning on that, including our own efforts to be active on social media and spread the word about what we're building, write blogs, and then those blogs also had their own journey of, being quantity focused in the beginning to more and more quality focused and very highly relevant blogs, which are today ranking quite highly on the relevant keywords. So it's been a journey across both paid marketing and organic marketing, and I would say we are like, I would give ourselves a 6.5 to 7 on 10 on, where we are in the marketing journey. There is still a bunch of stuff to do, but given our resources and also everything else that we had to do, it's not a bad score.
And Srivatsan, I think specifically, I think a lot of fintech founders out there would be really interested, right? If you go back to the really early, I don't know, 50, first 50, customers, specifically in the point of driving trust, right? Which is very important, especially in the space that you are in. What were those one or two things that you now in hindsight feel worked? And was it referenceable customers? Was it established banking partnerships, right? Because I'm sure that was the biggest question that people would have had.
Yeah. All of these founders doing the talking was one. Our own, like we used to write very shamelessly, IIT Delhi and ISB and all of these credentials, so that, people feel like, okay, having studied so much and, quitting jobs that must have paid them well, these guys must not be wasting time. So it must be something meaningful. In fact, our first business cards also had our academic qualifications so that, people in big banks would actually let us enter the building. Right. So I think personal credibility, we put all our personal credibility at at the service of the business. Secondly, the brands that we partnered with, right from the funds that actually invested in us in the beginning, to the bank partners that we were able to get, and a few early advisors that we actually spent reasonable amount of equity in the company to actually get them on board, so that we put our money where our mouth is, and got some credibility from them, as well as some very good early direction, warm connections in the ecosystem and so on. So I think, yeah, it's been just a combination of these things, and genuinely being there. Like I think up until 1,000 or 1,200 customers, which is quite a huge number to manage, we were personally on WhatsApp groups with all the customers. In fact, every day, even now, I still keep seeing some messages from some of our early customers on those WhatsApp groups, asking for some feature, or giving a positive feedback, or a improvement feedback or something like that. So all of this helped.
I would add one more thing, which I think, at least for me, it's something I learned in hindsight, that having people and being ready to do sales and not just marketing, I think is also something that worked in building the trust. Because even if it is not an IITian, even if it is not me or Srivatsan on the Zoom call, but it is one of the frontline salespeople that is talking to the customer. I think just having a human being who is smart, presentable, can talk sense, can listen, can understand the customer's pain, and is able to suggest some solutions and have a good conversation. I think that also builds a lot of trust. So after the first 200 odd customers, when we had a sales team in place, I could see that a lot of those customers were actually able to trust these human beings. And if we had not had a team in place, and we would have expected to grow in a product-led growth way at that point. I mean, today more than half of our growth is product-led. But at that point, if we had burdened ourselves with it and tried to prove to everybody that we are doing this fancy PLG thing, I think it may not have worked, and we would not have been able to build the same kind of trust.
And that actually really resonates, right? I think the both of you are mentioning that high touch point with the customer. And now I'm kind of looking back, that would have been such a big difference from the way they were experiencing the relationship with the banks, I'm sure, right? And I mean, we all know, right? The life of an average Indian exporter is fairly hard on multiple fronts. And sometimes I think having that kind of almost like a trusted person that can listen to you, right? And I think when you use the right word, right, like help you problem solve, I think that can be a big differentiator.
Absolutely. And I think the other adage that even comes from, I think, the Airbnb founder and that group is do things that don't scale. I think for us, the sales motion is something that we knew will not eventually scale. We cannot be devoting sales effort on every customer, because we are serving very small businesses. At least that was the case 1 year back. So the CAC and LTV is not going to work out if we keep doing this. But at the same time, we just felt that at that point, it was not something to think about, and we can figure out scalability eventually. But at that point, building trust was important, and over time, trust will compound. And we have started seeing that happening. I think we are a much bigger brand now than we were 2 years back. And it is much easier to convince customers because they've heard our name from multiple people. There's enough presence on the internet. There's enough, news that has been written about us, and so on. And we've got an RBI authorization, and so on. So I think because of all this, it is much easier to now build that trust, because there are so many secondary sources. We have ISO and SOC 2 and a few other such certifications. So customers are actually finding it much easier to trust us now, which is also leading to more product-led conversion compared to earlier. So I think that also helped, just not being nervous about scalability initially and saying, let's do it for now and let's figure it out later how to scale. Helped.
Yeah. And I think, Movin, coming back to the kind of the product side of things, right? As the roadmap has evolved now over the last 2, 3 years, right? What are some of the kind of North Star metrics that you kind of kept for the product, and on this journey to PMF, right? Where you said that, look, if this is what we need to see in the product for us to have that confidence that we are actually kind of getting those early PMF signs, right? And we feel kind of good about it. Talk to us about some of those nuances around the product.
Definitely. I think for me also, this has been a lot of learning because most of the products I've built till now have been B2C. And this one, while we don't yet serve very large enterprises, but we are still B2B, whichever way you look at it. So one thing that I've learned, which I think is very different from my past experiences, is data will not tell you everything. We built several features for accounts receivable and reconciliation, tax compliance, and so on, where it is actually far more valuable to sit across the table or over a Zoom call with a customer and go through painful detail of what they do today, and then come up with the workflow that can improve their life, and come up with the solution. So let me give you an example. How does a typical Skydo customer make an invoice? That is the question we asked about 2 years back, once we had the basic product in place. A lot of customers were using Excel sheets and Google Docs to create invoices, and it was very ad hoc, error prone. The invoices were not looking professional to their clients, and so on. But we went through all of those painful details. Literally took a demo from our customers of how they create invoices today, and then and not every customer was doing the same thing. It was also very fragmented, right? Some were using some invoicing platform like Zoho or Tally. Some were using spreadsheets and Google Docs and so on, and a long tail. So we understood all of that and then said, okay, if Skydo has to help these customers in building invoices, then which is the right place to attack? Should we try to get people who are using Tally or Zoho to start using Skydo? We realized that that's not going to work, and those people are really loyal to those platforms because those platforms are also fairly complex and they do a lot more than just invoicing. So, getting them to shift their invoicing to Skydo is not going to work. We also realized that the kind of problems they were facing were not as severe and they were happy with what they were doing. Whereas those who were doing ad hoc invoicing was the right place for us to attack and, give them a significantly better invoicing experience. So the reason I took this example is that had we taken a data-driven approach, which is usually the fancy thing that every young PM thinks of, it may not have led us to these answers. Even today, I don't think data alone is the way for us to understand what can Skydo invoicing do better. And I'm taking invoicing as the example, but you can take any B2B feature as an example. There are, of course, areas where data is much more helpful and is the dominant way for you to discover problems. But even there, I would say that you have to lead with a hypothesis. But in places where workflow is involved, where somebody is going to spend 10 minutes on your platform to create an invoice or to do some reconciliation or to send out a ledger to their client, you cannot just look at data. For example, how would you look at data in this thing? You would say, if there is a drop-off, then maybe the product is, requiring some improvement. Maybe if the customer is spending too much time on one particular page, then the product needs some improvement and so on. But the problem is that these things are so core to the life of a user. If somebody is exporting and you built a really shitty invoicing platform, they will eventually figure it out and learn it and learn to work around the quirks and, bad experiences that you provided them. So eventually data will not show you where your product can be improved, right? Whereas if you really go through it from first principles and, ask a few customers who are using it for the first time, what can we do better? Or where do you really face frustration today? And you keep listening to those new customers in your customer support channels and so on also. I think that's the right way to do it. And by no means am I saying that data is not important. I think 50% of problem discovery will still happen through data, but it's just not 100%. So that is one key learning for me. And that's also been something that I've tried to execute in building the product team. And that's been my message to them throughout, that don't just depend on data. Don't just keep looking at your laptop. Actually talk to customers and understand where they are getting frustrated, or having to spend much more time than they need to, and so on. Of course, there are, as I said, there are areas of product where data is much more important. For example, growth. There is a conversion funnel. Certain people drop off during onboarding, and you just have to keep chipping away at those issues that cause those drop-offs until there is zero drop-off. And that will, of course, never happen. So as you keep scaling, you'll keep improving your onboarding experience, and keep removing the reasons for drop-off. So yeah, these have been a few learnings as we've built our product. That there are different areas within product that need to be looked differently, and data is not everything in some of those areas.
And hence the value of continuously speaking to customers, right? And I think Paul Graham's mantra keeps coming back in this pod, right, of doing things that don't scale. And sometimes there is a tendency of teams to kind of over automate things, or like, as you said, right, go into a quant mode in a lot of these things. Whereas I think my observation again across as an operator in my own startup as well is that for actually several years the game is actually qualitative. Until you kind of hit that point, right, where then there is enough numbers to chew on, and the numbers start to make sense and tell a story. Srivatsan, coming to you on the team building side, right? What is it that you both have kind of looked for in those early hires as you built out the team? I, of course, met a bunch of team members, and I think there's a very distinct culture that Skydo has created. I've always felt it whenever I've come to the office as well. So break that down for us, and also talk to us about some of the missteps as well, right? I think those are important, and people don't talk about that.
I think a few underlying tenets were one, just like with the customer, with the employee, also be very transparent, right? And I think the early 1.5 decades of startup history in India is unfortunately punctuated by a lot of misselling and broken promises, especially in terms of ESOPs and so on. And each of us in our own way have been also victims of that in our previous jobs. So the first thing that we said was, let's be transparent. Let's be transparent in a very radical way. So for instance, we put out our P&L for the entire company to see, right? Our all hands, there is no all hands deck, there is no investor deck, and there is no internal MIS, nothing, right? So far we've been like any startup, in discussions with multiple investors over the last 2-3 years in terms of each round of fundraise. And every piece of document that I've shared with anyone externally is a document that I use for my own business review, and is the document that I share with every employee of the company. It is a scary thing, even as I say it, because there are lots of risks and leakage possibilities. But I also think the alternative is not any safer. So between the two alternatives of being secretive versus being transparent, I think being transparent actually gives you a higher odds of long-term success, irrespective of the short-term stress that comes with it, right? So I think that's the one thing that we said we'd first offer to anybody who comes in. Secondly, we also wanted to be looking for people who would rank at a 7 or an 8 on capability, but a 10 on intent. And what we mean by intent is come with the maturity and understanding that nobody is forcing me to join an early stage startup, but if I did join an early stage startup, then these are the next steps that naturally follow. Yeah, I can't go into an action movie and not expect to see a fight. you walked into the theater, so you are this is what you're going to see, right? So that maturity, irrespective of the age, some people have it very early in their careers. Some people do not have it even after several years of working. So this is one thing that we always look for, which is this person a good stage fit for an early stage startup? Does he have the intent, he or she have the intent to fight it out and continuously learn and develop themselves? If those two are there, then ability is actually something that can improve over time. I also believe a lot in compounding of ability. Then I think one other thing that we also do not usually get dazzled by is uh, someone's resume as part of a blazing story, saying that hey, this person did X in Y company. That may or may not be due to their own intrinsics, right? It may just be that they were right place, right time, and did a great job. So I'm not saying we'll discount it, but I just think that we don't usually give it undue importance. Our interview process is typically strong academic pedigree, which kind of showcases a little bit of first principles thinking ability, and then an interview process which mostly tests for that the existence of that intrinsic thinking ability. And then these qualitative checks which are around: is the person stage appropriate? Does the person have the willingness to want to be a better version of themselves every few months, and so on. The At least personally for me, I would want someone who joins Skydo to think of this as their only job or their destination job. Of course, it's a mindset. It need not be that they have to be there for 30-40 years. They have to be, it need not mean that. But if they really think of this that way, then the only reason they would leave is for something which is 10x better, which could either be their own entrepreneurship or some opportunity that they really got because of the current the growth that they've had here, which the company may not be able to provide. But people would leave us only because of finding something extraordinarily better, and not because we did not fulfill some promise of theirs, right? So that's the very broad philosophy, and the interview process again works for this. We are also always saying that it's okay to miss one or two great people, but it's not okay to hire somebody we don't feel completely thrilled about on day one. Having said that, I think there have still been quite a few missteps that we've done. And I would say it all broadly falls into the same bucket of persisting with misfits for longer than we should, right? Misfits can occur for multiple reasons. One is we did not have clarity on the role when we hired that person, or it was a short-term need that we kind of overstated or over imagined, and honestly, in a few months that need disappears, or the person is not capable enough, or the interview process could not accurately capture the person's abilities, and in reality it did not pan out the same way. Whatever be it, I think it is quite a drag on everybody's mental health, and you know uh, it's a it's also a rub off on other people in the system if people who are not suited continue to persist for long, and so on. So I think that we could do better, be a little more decisive on certain things like that. Yeah, otherwise I think this has been our approach in general.
And just connecting the dots, with the earlier discussion as well, it almost sounds like um, transparency is kind of a core tenet, right, of the company. And you're talking about transparency in rates, how you deal with, how you tell customers. That was kind of one of the early unique value propositions or positionings. It's also translating to kind of employees and I'm just thinking out loud. It's actually a very interesting point, right? Which is you got to be consistent in your values. You can't be expecting the entire team at the company to be transparent to your customers, but then not walking the talk internally.
Yeah, absolutely. Yeah, and that two-faced approach is very easy for people to spot.
Yeah.
They may not be able to articulate it, but um, they can easily figure out that you're saying something and doing something else, and that immediately becomes uninspiring.
Yeah. Yeah. Coming to the topic of immense importance always, which is fundraising, and And I know that Skydo has raised, of course, money from Elevation, a bunch of marquee investors. It's still early days, and I think there is obviously a long road ahead. But what have been some of the initial learnings, Srivatsan, I think around fundraising, around kind of kind of just building relationship with investors, and this is always something that founders are very cagey about, right? Especially first-time founders.
Yeah. I'm continuing to learn every day, and I think hopefully becoming better every day. But um, the it's a tough one, right? It's one of the tougher parts of building a venture funded startup. From deciding whether you really need venture capital, is your business model going to benefit from venture capital? Because um, it is like, mounting a tiger, right? So then you better decide whether you really want to do it before you do it. Because the venture capital industry has its own, economics and way of working, and what needs to happen for it to work. So given that, I think the first step is to know, and we actually quite deeply deliberated this even when we started, that do we need investors? There were lots of friends of mine, very well-meaning friends, who actually said, somehow bootstrap your way to 2 million ARR, and then, figure it out. Or at least, just get friends and family money and then get to 2 million and so on. But we very consciously chose that we will be a venture funded company because of two reasons. One is, both of our ambitions was to build a large business. And when I say large, a really large, globally relevant business, which could potentially, go and IPO in some of the largest markets in the world and so on, which means that it has to be a multi-$100 million revenue business. That was our aspiration. Um, and so we said that, in this large aspiration, we need as many partners as we can get. And those partners can come in the form of investors, employees, advisors, and so on and so on. So we have always been very keen. And one of the good things that we did was we actually got a bunch of angel investors even in our seed round. In fact, a little over 60 angel investors at that point, and I think a further 20 odd in the second round. And we also got a few, smaller but very, thoughtful, institutional investors. You are one of them, right? To also partner with us because they had some unique insights, and a strong goodwill to be part of our business. So I think what we have done well, these are all the things that we have done well, which is be clear about why we need venture capital, and therefore sign up for the journey that comes along with it. Then get not just the lead investor, but also be generous with sharing some equity with angels, with advisors, and so on, and also bring in people who may not necessarily bring you a large check, but actually bring a large heart and tremendous unique insight. So that those are things we have done well. What we have probably not done as well so far, and which we want to keep doing better, is stay in touch with a set of people, through fundraising and non-fundraising seasons, right? Obviously, it is difficult, and it's only a question of bandwidth. The intent has always been there. But when we are not raising capital, thinking of these folks not as capital providers. This is not a tap that I need to open only when I need water, but this is actually a friend that I can keep in touch with. And I think that's something we can do better, and we have started addressing it a little bit, but I think we can keep building on that. Because ultimately, I think in subsequent rounds, especially as we go along, see, now we are what is called post PMF, and on the cusp of between seed and early growth. That's where we are in terms of our scale, right? Soon we'll be in growth stages where track record, trajectory, then did you actually do what you said you will do last year when we met? And then consistency of progress over the years. That's what really investors are looking for. Nobody's going to make a point in time decision to put in a few tens of millions of dollars, which would be the size of ticket in larger rounds. But they would actually be very thoughtful investments made after tracking somebody for several months or several years. So I think that's probably what we should start doing a lot better and a lot more consistently going forward.
Yeah, I think one of my observations has been that that both of you have approached kind of really building relationship with investors and fundraising in general with a very, it's a truly partnership driven way of looking at things, right? Versus kind of introducing an unnecessary power dynamic, which is where I think that causes a lot of stress for founders in
Yeah.
general. But the moment you take this, and it's almost a very forthright approach of saying that, look, I mean, we all are kind of building this together, right? So, I mean, this is not an adversarial competition, and I'm truly kind of looking for people who are aligned with the team and with the vision and with where the company is headed. So, I think that is truly refreshing, and I think a lot of founders can learn from that.
Yeah, exactly. Because the amount of mental bandwidth you need to spend to actually, think about game theory scenarios and thinking, if I did this, if I said this, if I actually email this person, should I email versus WhatsApp? Should I take 10 days to check in versus not? If I send a message now, will I look weak versus strong? I think it's just so hard. I just think that, it's better just put the cards on the table and say, hey, this is the reason I'm racing. I really like you because these are the things you get about our business. Is there a way to make it work?
Yeah.
Right. And I think that's probably easier on everybody. It may not always pay off. And I think while I'll probably be making an oversimplification if I say that this is the only thing that fundraising depends on, there is also a lot of market dynamics, availability of other interesting opportunities for investors to pursue, and so on. And in fact, you may be the best company in your space, but if another somebody who is at 0.8 of your capability but available at 0.5 of your price, that might still be a very attractive proposition for someone else. So there are lots of other dynamics, right? So I'm not saying we should be naive, but I'm just saying there is just too much complication involved in playing out game theory scenarios, but a lot easier being straight.
Yeah. Ultimately, I think it comes down to both the sides, having enough space in the process to do what I call as conviction building. I think that's most important. I think once people come in with true conviction on both sides, it's actually becomes a very beautiful journey for both sides,
Yeah.
irrespective of, anyway, building a company's hard, right? But I think it just makes things much easier on every stakeholder. Movin, coming to you, uh, this is a very, very exciting time. I think Skydo is inflecting in many ways, and one of the reasons why I wanted to do the podcast right now. Uh, Looking ahead for the next 24 months, what are the things we can look up to, right? As potential customers hearing this, potential investors, people who want to probably perhaps join Skydo as well. What are the next 2 years in store?
I think I'll start this with a few things that have happened recently, which have given us the confidence that we are now ready to fly into the next orbit. We got our RBI in principle authorization for cross-border payment aggregator, something that we had been eagerly awaiting for the last year or so. And to be honest, I think we're incredibly lucky and honored to be the first cross-border payment startup to get this authorization. Um, it puts huge responsibility on our shoulders, but at the same time gives us huge relief that the way we are doing things and the what we are trying to build is something that has the stamp of an authority that has been around for several decades and is trusted by the entire country and I think a big part of the entire world. Uh, so that also takes away a lot of business risk, a continuity risk in terms of our business model not being appreciated by the regulator or by the government and so on. Uh, and then there have been a few more wins, including getting approved by Amazon as a partnering PSP to help them settle payments to Indian sellers who are selling on Amazon's global marketplaces. Uh, and a few other certifications and awards and so on that have gone our way. I think uh, so. At this point, I would say, as you said, we are inflecting in many ways. So there are, I think, quite a few things that we want to do over the future. But the select few things that I think are really exciting me are, as Srivatsan said some time back, we are now able to do multiple things at the same time. I think that's, and both of us are really happy about the fact that we really focused hard when we needed to. It was painful and to some extent a bit of a drudgery, but because we came out of it, successful. At this point, we have the resources and the bandwidth and the I think motivation and the knowledge to be able to fire multiple arrows, in multiple directions. As is the case in any business, some of them will succeed, some of them won't. But we are able to take multiple bets at the same time. So we have something called Skydo Labs, which we started about a year back, where we internally almost created startups internally within Skydo, broadly within the cross-border space itself. So the idea is to stick to what we set out to do. But within that, there are just so many customer segments, so many use cases, so many corridors that we felt that we cannot start this when we are 5 years old as a company or 10 years old as a company. We have to start this at that early stage where we know that we've got early success in our, the one thing that we set out to do. And now we need to start expanding and start, widening our horizon. So we are starting to see early green shoots in Skydo Labs. And over the next 2 years, I can't wait to see where this goes and how many more bets we are able to take and how many of those result in success. I think the one good thing we've done, touching on the previous question of hiring, is hire a lot of ex-entrepreneurs or future entrepreneurs, and in some cases both, right? So these people naturally want autonomy, want to not be told every day a detailed set of instructions, and want to be given large goals, and then want to run after them like mad, right? So that's something that has helped us a lot in Skydo Labs, and we've carefully curated, opportunities and people and matched them to each other in Skydo Labs. So yeah, I would say that's the number one thing that excites me, that Skydo will become a multi-geography, multi-use case, multi-customer segment cross-border payments company over the next couple of years. And in some of those segments or opportunities, we would have reached, winning market share and started to mature and taken a leadership position. And in some of those, we would just be getting started and we would be the underdog, right? And I think that's what I want the status to be for the next 10 years. That we keep winning in certain things and then keep starting new things where we are the underdog and we still have to figure things out and we're still being that, humble new entrant and trying to learn things. I think other than this, we've got a great leadership team, a great, GTM and a product and a tech and compliance team in place. So just executing the core really well and growing the business month on month, and that growth rate compounding, the capabilities that we built compounding to continue to give us, fast growth, I think is the other thing I'm excited about. And there have been times when we felt, is all of this even going to come together? We're working really hard. We've put in place so many investments. We've spent so much money. Are we actually fundamentally doing the right thing or not? So those doubts have, over time, I would say, resulted into much more confidence, because a lot of those things are now starting to come together brilliantly well, and the team has also shaped up well. They understand what they need to do, and I think the other thing we've done in hiring and has gone well is we've hired for the future. We've hired for about 2 years from now, so that the people that we currently have are capable of operating at the current scale and the scale 2 years from now. They will feel challenged, 1 to 2 years from now, and they will have to grow. Some of them will, some of them won't. That is the usual story with any company. But at least I think we've taken forward bets in hiring in almost all areas. So because of that, also, I'm really excited that, it's not something that will stall in the next 6 months. It is something that we've truly built to last.
And the most heartening thing from hearing this is that essentially what I'm hearing is that the next level team is stepping up, right? That's how you're able to do kind of so many different things, right? Which is always a great sign for future execution. Final question, and Srivatsan, I'll request you to close out, right? So for any Indian SMB exporter, enterprise exporter, anyone doing business with the world, who's dealing with the drudgery of dealing with all these old banks, with these painful remittance processes, what would be your 30-second spiel, right, to why they should use Skydo?
I would say, your life is hard enough as it is. So just focus on growing your business because it is India's time, it is your time. And let us do what we do best, which is to give you peace of mind in terms of making your payments fast, compliant, convenient, and transparent. We should be your only cross-border bank or cross-border operating system, irrespective of where you export to or import from.
That's awesome. Very well said. So to all Indian exporters out there, definitely check out Skydo. And trust me, your lives will become much more simpler. And I'm kind of closing this out with that keyword, which is transparency, right? I think that is something which is a very, very unique thing about the company. This has been a great conversation. Thank you, Movin, Srivatsan, for taking out time. I think Skydo is a very unique company, and that's why I wanted to kind of record this podcast, bring this experience out there for other fintech founders, other actually founders building the whole India to the world story, right? And lastly, thank you for making Operator Studio as also as part of the story, and I'm super excited for where we go from here.
Thank you so much for having us and asking us these brilliant questions and listening to us. I hope the audience enjoys what we said.
Awesome.